Hey traders, it's Danielle. Welcome to the free video. So today I'm going to be talking about CrowdStrike. This is actually a ticker that was brought up in the trading room by one of our members today. I just absolutely love it when this happens. Honestly, that's just the benefit of having a trading room with 2,000 plus people there, right? Sometimes other people find setups and I look at it and I say, that is gorgeous. So why do I love it? Well, if you take a look at this chart pattern right here, you are going to see that CrowdStrike has had a pretty crazy move, right? Overall, it is one of the holdings that I have in my stock portfolio, but I also love to trade in the options market. Why? Well, it's a newer, innovative company, but even more than that, look at the pattern. So last quarter, it had pulled back into the support and then boom, off it went upon the earnings report, okay? Usually when that happens, we get a pretty decent run into earnings the next quarter. Why? Because investors are looking at what happened the previous quarter. They want to get in before the company reports earnings. And so typically what happens is there is a move up in price prior to that earnings report. Now, if you go back in history, it wasn't just last quarter, okay? The quarter previously, we also saw a pretty nice gap up in the quarter before that as well. So you basically have 3 quarters in a row where this thing has gapped up and moved, great moves on earnings, and now we're coming up on another report. Now, I will note that it's a little bit early to be looking for this, okay? The earnings report is going to be on the 16th, and today, when I'm making this video, it is February 8th. So, usually for a run into earnings, I like to get in about 3-4 weeks ahead of time. So it's a little bit early, but I think it's a really good one to keep on your list. Now, a couple other reasons why I like it is because it has a cup and handle pattern. You can see that my trend strength candles have gone from red to yellow to green. That's basically a confirmed buy. We also have a squeeze. The VZO has traded from oversold up into this kind of mid-level range, which shows consolidation. And usually that consolidation is going to break out and it's going to trade in the direction of the trend up to about $250. So what do we do with this? Well, as of right now, it's my least favorite entry spot. Okay, this happens all the time that I find great tickers that I want to get in, but the entry isn't really great. And so that's why I do one of two things. I'll either get in with a small position so I don't forget about it, because that's very sad when that happens, or I will wait and get in on a pullback. Now, obviously, if you wait, sometimes there's never a pullback, but since we do have about 5 weeks or so, I think there's probably going to be a pullback in the next 5 weeks. So looking at this right here, you have key resistance directly at this level, right about the $230 price point. You're just sitting right below it. A better entry spot, if possible, if you could get it, would be around 210, even around 215 would be better than at 222. But overall, what I would love to do with this is, number one, buy some shares. Great company, showing the continued growth. I know it's already, moved higher quite a bit. I think I got my first set of shares down in here somewhere. I'd have to go and look back at the previous entry point. But because of the growth that's showing, I do think it's good for some more shares. Also, on top of that, it's great for an options trade. So we have the earnings report coming up in this series, which is going to be the monthly series, actually. Okay. So typically what I do with these is I like to get some in the money calls. Now, you'll see with this ticker that these are pretty expensive. Normally I like to keep my call buys below about $1,000 a pop per contract, but for a setup like this, I would go for it. So we have Delta 70 calls running for about $3,000 a pop, which is, going to be a little bit more than what I normally do. But those are in the money calls, and if you do get that pullback, they're going to hold their value better than the out of the money calls. I do like the out of the money calls here, especially the Delta 20s, Delta 30s. Those are obviously going to be a lot cheaper. The reason why I like these is because typically you're going to see a rise in implied volatility going up into the report. And because that report is still 39 days away, you still have quite a bit of time for that rise in price and that rise in implied volatility to continue to go up. Now, I will note that with the out of the money calls, if you get a pullback, those are going to get hurt even worse. So that's why usually with those out of the money calls, it's even more important to buy it on a key support zone, 34 EMA, 21 EMA, something like that. And that's really going to give you your best edge as far as an entry. Now, the other thing that you could do, which is something that I like to do a lot, is I will just look. I mean, you can see all these different series right here. Yeah, you've got a series here. You've got weekly series, right? So what you can do is you can go in here and you can sell put credit spreads at multiple different series going into this actual report. So I typically like to sell them at the money. Now you'll see right here the spreads are not fantastic. You've got a spread 780 by 920. It makes it hard if you want to buy an option. But if you want to get into a credit spread, as long as you can get about a 1-to-1 risk reward, for me, I will do it. It does make it a little bit harder for me because we have so many members to post a trade when there isn't as much liquidity. But for an individual retail trader, you can definitely trade strikes like this, especially if you're trading with a spread. The other thing that I do like to do with something like this is to do bullish butterfly. Now, in this instance, because the options are pretty thin, if you look along the options chain, you're going to see that you only have less than 10 contracts traded for each strike in the weekly options. That for me is not going to be enough liquidity to do a butterfly. So even though I've been told I'm the butterfly queen, I would avoid butterflies in this instance. So to sum it all up, for CrowdStrike, I think that it's a super high probability bet. I love the run into earnings. I'm targeting $250. The options trade on this is going to be a little tricky just because of the liquidity, but I do like the in the money Delta 70 calls. I also like the Delta 30s, Delta 20s. I would prefer a pullback buy, really anywhere between 210, 215. Obviously, the lower the better, as long as it's above the 50 simple. But I think this is a great setup, and I think this one can run going into the earnings report. Now, how do I get out? Well, as a general rule, I usually get out the day of the earnings report. I do not want to hold these calls through earnings, but there's a caveat, okay? If this ticker is going to make the target, let's say it makes it a week before earnings, I am taking my money and I'm running, okay? You make the target, I say thank you, Mr. Market, and I move on. So that is about all that I have to say today. I do want to let you know that I am going to be having a webinar coming up with Landon Swan, co-founder of Likefolio. I'm very excited about this because, when I first got into trading, I was pretty hesitant to trade earnings, to say the least, and now I'm very active when it comes to earnings trading. And, there's a reason for that. It's because you have 3 different opportunities. You have a run into earnings, you have an actual earnings report, and you have a post-earnings move, and it comes up 4 times a year. So I am going to be sharing a couple different things about my method along with Landon Swan. He's going to be sharing a bunch of really cool stuff that comes with Likefolio. This is a platform that he has co-founded. Basically what they do is they look at social data to determine what they think is going to happen on earnings reports. Now, he's not going to tell you that's exactly what it is because, he doesn't want to sound like that. But I'm going to tell you that's exactly what it is. So basically, when you're trading an earnings report, you're going back and you're saying, okay, well, what has happened with this company over the course of the past 90 days? How could you possibly know? Well, you can read news stories, you can look at the charts. But the reason why Likefolio is awesome is because they're looking at the actual social data, and that is what gives you a hint as far as what could actually happen. So that's why I love it. That's why I'm going to be talking about it. If you want to join me for that webinar, you can go to simplertrading.com/wave. That's WAVE. Sign up, and I will see you there.